And a mic test, 1, 2, 3. All right, hello. Welcome everybody, and Sherry, thank you. Good to see you. We are live. This is the market analysis. We're going to be discussing this upcoming week, May 21st to the 26th. So what we're going to do, like always, is we are going to begin on Forex Factory. So let me just go ahead, put that up on the screen so that we can all clearly see it. And what can we expect this upcoming week? Well, Sunday it's going to, just be more of a calm day as always. Remember, just because it's still technically the weekend, still could be some very high quality situations setting up. Monday we do have the Euro group meeting, so with the Euro we are going to be taking a look at a few different currency pairs with Euro as the base currency, and there are still some pretty large market gaps. So moving forward onto Tuesday here, we do have some red folders on the Euro, as well as the British pound is going to be having some hearings about their inflation situation. Moving on to Wednesday, this is really when I feel the reversal for the bearish momentum is going to really pick up and start trending on the Euro. We have Draghi speaking in the morning, and then of course we do have the Canadian dollar interest rates, as well as the Bank of Canada doing a official rate statement. We will be having some FOMC meeting minutes going on as well. So in general, Wednesday, expect the volatility in the market to really start picking up. Moving into Thursday, we do have two different bank holidays on European influence currencies in France and Germany. We also have the British pound second estimate of their GDP. This is a quarterly release. We have OPEC meetings, so really just a lot of meetings this week. The typical unemployment claims on the US dollar, and then Friday just with a little bit of news in the morning. And that's really all that we're looking at fundamentally for planned economic events this week. So it's really good to just stay on top of it. Make sure that you're checking into an economic calendar so that you don't get caught in a bad position just because, suddenly price moves 20, 30, 50, 100 pips against you potentially. Now, what we have on here, we're going to take a quick look at a stock I've been analyzing. This is Canopy Growth Corp. They are a medical marijuana producer, distributor. They're also in the process of really putting a lot of development into cannabis oils. And being here in Canada, This is very exciting because we do have legalization in the process, and this is really, really, really great. Just looking at the bigger picture for what it could mean for society. Now, with CPC, or CGC rather, right now we do have the monthly chart up. We're gonna go take a look at the weekly. This is a 200 exponential moving average, and for those of you who need a quick explanation of what the moving average means, essentially it takes the data of whatever period of time. So because we have a 200 up, we're looking at the daily. This purple dotted line is averaging out the trading price of the last 200 days, and then that is where the price or where the line would be. So looking at this chart, I mean, you can clearly see that we've had some downwards movement coming in through the entire the entire first half of 2017, aside from a little bit of bullish movement in January. Now, I am looking for buys on this stock in particular. I'm going to be looking to get in around the $5.30 level, so right in about here. However, but we're not going to go too much in depth onto this because I know many of you watching right now do trade Forex currency pairs. So if you're a stock trader, feel free to telegram me. We can talk more about that. I do have a few other investments I'm looking into right now. And we have the USDCAD on the screen. So for those of you who are new and tuning in, what is happening on this chart? Well, there are a few things. We're going to go ahead and we are going to clear the drawings just so that we can start fresh. Now, with my style of analysis, I love to look at things on the daily chart first, just so that we can get a bigger picture for what's going on. So right now I'm using TD Ameritrade's Thinkorswim as my charting platform. TradingView is a great one too. If we were to go and we were to draw a daily Fibonacci, we're going to cut out the wicks on these candles, just go from the high to the low. You can clearly see we did have some rejection at the 61.8 golden ratio Fibonacci. We'll go ahead, we'll make that color coded just so that it's easy to see. And we do have some confluence down here at the 38.2 with this 133 psychological level, as well as our 200 exponential moving average. Now, if we were to go and look at what could be potentially happening, we can see that this whole 135 range, right where price is trading now, there is some areas of consolidation that were happening very, very briefly. If we wanted to, say, draw on an area of what right now would be classified as an area of demand, we're going to make this about 40 pips. So just let me edit this up really nicely. And we're going to call this our active area of demand. An area of demand is essentially a place where buyers are looking to get into the market. It's getting that best optimal price, so to speak. Go ahead, we'll put that on the screen. We're gonna make it green, and this is just one little area that we can see. There's a psychological level, that 135. We didn't quite hit that low on Friday. And what could we be looking at for this upcoming week? It's all great to talk about in hindsight what happened, and we obviously are looking to capitalize on opportunities as they present themselves in real time in the markets. So to get a better idea of the general direction on this currency pair in particular, we're going to really quickly go over to the dollar index. And you can see, let's just go again over to the daily. You can see where my target is currently on the US dollar. I am bearish on the US dollar, and the 95 cents is what I'm looking at as my first target. If we're talking about on a bigger picture, I mean a fair price for this to be trading, you can see very, very, very bearish week last week. And again, with the monthly fair price, I mean this 95 cent, I do see this being achieved in the very near future. I would anticipate before the end of the year to potentially see us either trading down here in this whole 80 cent range, or on the webinar with my students that we did the other day on Thursday, we also did have a projection for Trump's presidency of maybe we could see a new high based on the information that this chart is giving us. So we can see again, it's been bearish on the USD. This to me does not look as if we're going to get some insane correction to the upside anytime soon. It's a very clear downtrend. This was a nice signal, in my opinion, that just really projected what could have happened. And this right here, this was just a little bit of profit taking, a little bit of people looking to, you know, get in or out of the market again, and then continuation of the trend. So we could anticipate a little bit more consolidation. We're not going to go too in depth into this in particular, but you can see we did have that market gap. It was filled, we consolidated, and then the downwards continuation. Back to the USDCAD, with that in mind, with more information to consider, I would expect bearish movement to continue. We do have some momentum that started, plus we did have that nice confirmation of the rejection right below a psychological level. We didn't quite hit 138. And you know, keep in mind with where price is at this time, we're about 12 pips above another psychological zone. So it would not surprise me if we did get a little bit of a retracement back to the upside. If I were looking to place some potentially highly favorable sells, it would not quite be as high as this whole 136 level. However, it definitely could go up there. We could be talking 136.2. So we're going to go ahead, we're just going to put these on here so that we can easily reference to them. 136.2 would be the first price. I would feel comfortable just leaving a sell limit on there at this time. But given how this asset likes to move, and given the fact that we do have some very major economic news coming out on the Canadian dollar for Wednesday, this is going to be a chart that I'm going to come back to once I get more information after the first few days of trading to really see if my bias is still in place for more bearish movement. In other words, the Canadian dollar gaining strength. Now, my charts aren't going to be too complex. We're not going to put a bunch of stuff on them because there's no point in confusing ourselves with the analysis. Another good place where I will be looking for sells, not quite at this 135.7 zone, a little bit higher. We're going to go up to the 135.8. You can see if we zoom in, we do have some wicks down in here. We also have what looks to be as if, you know, this little rejection right here coming back up, not quite to the whole area of consolidation up here, but we did have some confluence in line with what happened right here. This was on the 12th at 8 a.m. So there most likely was some major economic news. If I go back real quick and look on Forex Factory, what happened that day, there was just a bunch of CPI, core retail sales, bunch of news on the US dollar, as well as the first day of G7 meetings. So, you know, when New York opened on this day, we had some very nice bearish movement and then immediately took it back, continuation. And this to me right now is in a downtrend. This to me is looking as if we will see trading at lower levels. If we're talking about targets for the sell, my first target would be this whole 133 level. Maybe not as low as this. We could be looking at 133.2, just because I always like to be certain that my target will be hit rather than missing it by a couple of pips because I'm putting my order where everybody else is. That's one of the things that we do learn as we become, you know, just even more wise in our trader development process, is to go against the norm, to not get scared out of our initial position when certain things happen, and really just to continue to remain a student and grow our knowledge with each and every single opportunity that the market presents. Take a quick look here, and you can see again, this is a Renko chart. So essentially for every candlestick that is here, it is equal to 50 pips of price movement. So we did have some very nice bearish movement happening here. We can see that across all charts. It's very, very simple. And for those of you who trade patterns, perhaps you're seeing what's going on right here, and you are agreeing with the sell bias as well. Maybe not. Let me know in the chat if you are trading USDCAD, what your projections are. But for me at this time, I will personally be looking to enter a sell position, not a market execution, but using a limit order to my advantage. Moving forward, we are going to take a look at the US dollar yen. This is a currency pair that I haven't traded in the last 2 weeks or so. We do still have this little market gap that hasn't been filled necessarily just yet. However, I am bullish on this pair. I wouldn't really be expecting this to fill, anytime in the near future. If we look on the monthly chart, this candlestick right here is very, very powerful. What happened in April, this to me is signaling that there is a very high possibility that we will see trading up to at least the 116 level, right in line with these wicks and what was going on over here. So if I were to just go and make it very, very clear for you, I could put a price level on. I'll make it right at the price that we're talking about. So this would be a, so to speak, long-term bullish target on the US dollar Japanese yen. Now, of course, we could get some more continued bearish movement. Where would I be looking at? If that were the case? Not as low as what happened over here at 105. This was a very strong price anchor, especially with a couple of months of consolidation that we had. But we could be talking about, the 107 level potentially. That would fill that gap that we had as well. But I don't want to confuse you. We're going to just discuss what I feel could happen in these upcoming days for this next week. So we're back on the daily now. We're going to put on our Fibonacci's. And we're going to go from the start of what happened right here, see how it coincides with what's going on over here. I don't really feel like this is a necessary piece of information given that specific fib. This one, I mean, with Fibonacci's, you can draw them in so many different ways. There's no right or wrong way necessarily. It's just, you have to stay consistent. You have to stay congruent. And I could tell you, okay, you have to draw your fibs from this high to the very low. You have to go from wick to wick. I could tell you that you could draw it from here. You could draw it from here. You could even do it from this most recent information over here. If we only wanted to consider what's happening right here, we could go and we could do something like this. But it's not necessarily something that I want to have on my chart at this time. I still am looking for more information on the US dollar yen, and I personally wouldn't be looking to enter a market execution at this time. But what I would say is a very highly favorable situation is to have buy limits right here in this gap. Really just pay attention, a stop loss no further than what happened over here. But for some, this is a very large amount of risk. This is about 150 pips, I believe. 1082 to 1095. So yeah, it's about 130 pips, we'll say. And again, looking at the intraday basis of what's happening on this pair, to me, this is signaling that we could see some more downwards movement, especially to start off the week, fill in this gap, and then once price is trading down here, that is when I will be looking for entries. But given this time, I'm not going to spend any more of our time on this chart. Now, we're going to take a look at the GBPUSD. The GBPUSD, for those of you who haven't seen any of the weekly trading outlooks that I've done in the past, this may be confusing. So what we're going to do, basically give you a quick idea of what it is that we're looking at right now. Let me just go ahead. Let me get some of this stuff out of the way. I just recently did an update on my chart, so I'm not sure how to hide the drawings. I don't want to delete these. But basically, the GBPUSD I'm very bullish on. I've been looking for buys, taking buys, really just capitalizing on all the opportunity that this currency pair in particular has been giving. It's a very volatile one, but it also it trades in such a manner that's comfortable for me. The risk, the reward, and really just the action that it sees. So with that in mind, with this current bullish movement that we did have on Friday, if we look at the weekly, what I'm actually going to do, I'm going to put the GU on this inverse chart over here so that it looks clean for you first, because it can get confusing with all those drawings. So let's just go like this, come over here, and we'll do a quick little fresh analysis for you, and then we'll get back to that other chart. So on the GBPUSD, right now what we're looking at essentially is we have a point of control and a nice big area of consolidation, ranging, whatever you call it, whatever you understand about what's happening during this right here. This was Brexit, the announcement of Brexit and what happened. So you can see that on your chart. And then the entire summer after that, from the end of June all the way through July, all the way through August, right up to September, and then in the middle of the month, right into October, we just continued that downwards movement. So the summer, if we look at the GBPUSD, historically speaking, we have 3 months of consolidation here. This was in 2016. For 2015 here, if we take a look, we'll go from around when Brexit happened, the same date at least, so the 24th to mid-September. So we did have a lot of consolidation here through July, through August, a little bit of large movement in just one direction for the end of the month. However, let's keep going back. Let's look at another year. 2014, we have a nice little high point up here. This is a 20-year daily chart. So again, we're looking at June. And then you can see here, for this summer, it was a very clearly bearish summer. So overall, if we want to just see what happened even more clearly, we can take a look at the monthly. So right here, this is summer of 2014. We have not just a bearish summer, but a bearish year overall. 2015, we have the the July candle right here that signals some downwards movement. Towards the end of the year here in October, we do get one bullish month, and then we finish off the year with even more bearish movement. Right here, June, we start the summer off. Brexit, huge bearish movement, even more bearish candles, all the way down into what happened right here, our low point for the last 20 years. And then, of course, the last couple of months, November, December, all the way through until March of this year, we had several months of consolidation. Now, what does this mean? I'm sure that you have questions for how can we piece together the information that this historical back-tested data is giving us. Now, for me, the way that I see it, this candle right here, what happened in April, looking at the confluence of what's happening with this little gap that we're trading beyond, with the midpoint of these highs, the lows, all of these wicks, this was where there was trading interest. we're above a psychological level right now. We're at 1.3035, about 35 pips above that 1.3 area. And what I mean by, rather than just talking about what I mean, I'm going to show you what I mean. But looking again at the most recent consolidation range, disregarding this, because what happened right here, this low followed by this, we can zoom in even further. We'll get rid of the Brexit candle and it will be much bigger, much clearer. Coming in, what was this? This was the so-called flash crash. This was where they essentially accused the algorithms of causing this unexpected movement in the market. This, and we'll put an oval. This was number one. What happened right here? We had a gap down. Okay, this was in the middle of January. Gap down, 17th, huge move. I can almost guarantee you that there was some economic fundamental news on here, red folders, something that would allow the market to move over 400 pips on this day. Now, this is number two. For those of you who understand how to identify trends, what can we already start to notice? We're seeing higher lows, number three over here. And again, we can go so much deeper. We can look at what each of these individual days meant. What was happening this week before we had a shift of momentum, creating our higher highs. And of course, this is something that you gain access to as a student, the ability to just really go into the analysis. But coming back to this, what happened all right in here, my first target for the GBPUSD is at 132. And we did have that on the other chart, but that's essentially the middle ground for everything that happened in here. So if I wanted to make this very clear for you, you can go ahead, put a price level on, just make it exactly right there. But you can see what I mean by it's the middle ground. It's the point of control. It's the area where, regardless of what happened when we had strong moves away, we would come right back up and we would trade in this middle range. We would go, we had our wicks, we consolidated, we trade away from it, we come right back up to it. This 132 level, it's almost as if there is a magnetic force that keeps pulling price back to it and back to it. And I can guarantee you that this is a currently active area of supply. An area of supply, you could call it your resistance. You could think of it like that, but a better way to approach this is looking at the area of supply for what it truly is. It's an area in the market where there is a large quantity of pending sell limits. So in the event where price is trading and it's doing whatever it does, and then suddenly there's no more sellers, what happens? We have large movements like this where price needs to go up higher to seek more people willing to sell the market. Now, GBPUSD, if I wanted to put the other chart back on the screen, maybe you now have a better idea of what this means. We'll look at the daily real quickly. This right here, what's going on all in this. I don't necessarily feel like we're going to see trading in between this whole region for some time, but keep in mind, this is going to be one of the most powerful areas of demand right now. This is going to be, it's a 50 pip range, but this is where there's going to be large numbers of buy limits. I'm personally looking for buys always on this asset at this time until the market gives me more information to believe otherwise. I have open buy limits right now at the 1287 and the 1285 with a stop loss just down here at 1283. If price goes below 1283 with a strong close, I will have to do some reevaluating. I do believe that with this upcoming week and given how price closed, if we go and we look on the intraday basis, you can see here with what's going on, it would not surprise me to see a small little tiny gap. Just go ahead, I'll put the price on. We're gonna say, just to keep it congruent, about 20 pips to the upside. So on Sunday, what will I be doing if price opens around here, around this whole 1.3055 level? 20 pips to the upside. If we gap up, I will be looking for further sell confirmation. Now, what that means, it doesn't mean that I'm changing my bias. I'm still bullish on this pair, but we can make money and there's opportunity to capitalize in the market regardless of if price moves up or down, right? So given that and knowing this and having open buy limits with the expectation that we could see price continue to the downside for a brief moment before its extended bullish movement, I will be looking for the confirmations come market open, especially if it does gap up here. That will be just that will be a very beautiful confirmation for myself. What you see here, this whole little trend line, this was what we did on Thursday real time during the Asian session. We essentially came onto a intraday chart. We looked at what happened for the last day. We did the stream right about here, and then we just drew up, okay, what could happen? So we projected where price would close. It closed literally, you know, this is what, 5 pips above roughly where we thought we could see price move to. And for those of you who were quick, I did send out a signal. I had an open buy at the 129.106 level, so there was opportunity. I did close out with about 35 pips. Obviously, that was not the entire movement, but now it's just preparing for the new week, being grateful for the fact that we can make money in our sleep, at home, while we're out and about, whatever it is. We're gonna take a look at gold. So gold has been moving quite interesting. We've already done some analysis on this, and I am bullish overall. I do have pending buy limits. You can see that. This is our most recent area of supply. It's a $30 range with a high of 1320, a low of 1290. This is our most recent area of demand. Now, given the information that's on this chart, you can see that we've only just started to trade within our most recent area of supply. We did have this little gap right here. We did have this very important candle right here. And although we went lower, what's happening right now, it's a very clear confirmation, at least for me, to be looking to get in on the buying side and looking for those opportunities. So the best buys, in my opinion, are going to be around this whole 1239, 1240 level. It's about 15 pips to the downside. On the intraday basis, that is going to have some confluence with what was happening over here, all of this consolidation. I don't see us going quite as low as what happened over here. This, to me, was the last test, so to speak, and then obviously we can see what happened after that, but this was just a confirmation for me that yes, we are in a bullish trend right now on gold. Looking at the monthly, sure, we're having a bit of a bearish month overall right now, but what does all of this mean? If price closes within the body of this candle, that's a bullish confirmation for me. That's showing me that more traders are interested in taking buy positions, really pushing price up. We have our 61.8 golden ratio Fibonacci all the way up here at the 1500 level, and even with the weekly chart, it shows us very, very clear. We had a very bullish week. We closed just under the 200 exponential moving average. We do have a gap up here right by our area of supply, and to see price trading above 1300 by June 2nd of this year would not surprise me. We do have non-farm payrolls coming up on that date, so really just stay tuned for that. I'm very excited. Take a look at the EURUSD. If you have questions, feel free to let me know. If you have charts that you're looking at, again, feel free to let me know. The EURUSD, this is a currency that I am bullish on. But for this upcoming week, I do feel like, as I mentioned at the beginning of the stream when we were looking at Forex Factory, I would be anticipating some bearish movement. Now we're currently trading within an active area of supply. We have an active area of demand down here where our market gap is present. And I'm sure for some of you, maybe you got stopped out on a sell when this happened. This was over the weekend. We had a nice little gap to the upside above a psychological level. Could have capitalized on that down to 38.2 and then just continue to the upside. I will be looking for buys around the whole 110.5 level, but keep in mind, I'm the type of trader who likes to do things in real time. I'm not going to just sit here and, pull prices out of my ass, so to speak. The 110.5, it's very powerful. My stop loss would not be beyond the 110 level psychologically. We're looking to risk 40 to 60 pips to potentially target our 114 psychological level. There's so much confluence up there. It's something that even if we look on the monthly here, you can see there's been so much interest and so much ranging between where price is currently trading. We're at the point of control, so to speak, this whole middle ground of where we are currently right now. We've had higher wicks all the way up to our 61.8, 117. And with that, that's all that we're going to really talk about on the EURUSD. Bullish on the currency pair, just for clarity's sake. Dollar index, US dollar, I am bearish on. EURGBP, this is something that I'm looking to potentially start trading. It's presenting a lot of potential opportunity. If we look on the monthly, you can see that we've been just kind of chilling around for a little bit. We've been consolidating, although we've had some very nice, movement. We're trading within this whole same range. This is the first month in a while where we're looking to get towards the end of the month, and if we close above this whole 86.5 level, about 60 pips to the upside within here, that would be an indication to me that we're going to continue the bullish movement. But let's get back to the daily here. We have a market gap. This gap, it's consistent on pretty much every euro pair. I don't believe any of the gaps have been filled yet. EURGJPY, we still have one. Euro NZD, we still have one. EURGBP, we are just on that. We do have one that, technically wasn't that large. It was filled. EURUSD, we did have one. EuroCAD, not a very large gap, still hasn't been filled. EURAUD, not a very large gap. So keep in mind, you know, we're just really quickly looking at all these euro pairs. Gap hasn't been filled. And now tell me, if we go and we look at this, okay, this is the euro future. This is the individual currency. This is just the euro. We're not comparing it or looking at anything else. And if we go back and we look at, you know, the euro USD, we go and we put them side by side so we can see it simultaneously. What do you see? What do you see when you look at the candles? When you look at the euro as an individual currency and you look at the euro USD, and then you come to the realization immediately after seeing this side-by-side comparison that the euro right now is essentially leading what's happening. Sure, the dollar index, you know, it's important to consider because it's the quote currency here on the asset, but what's happening with the euro, with all of the so-called uncertainty, yet this gap here, you know, when I speak with traders, they have the assumption that the gap always needs to be filled, and I have something, I'm not sure if it's on this chart. On my MetaTrader 4 broker, there is a gap on the Euro NZD right about, it's somewhere in here. It's let me get the exact price for you right now. My apologies, just stay with me for one moment. And the reason why I have to look at MT4 is because different charting platforms, different brokers, different, you know, sources of candlesticks, they're going to give you different information. You're not always going to have the same data. So that's why it's very important to find a charting platform, find a brokerage that gives you very similar data. I have no complaints about what I'm using right now because when it comes to real-time price action trading, it's very on point. But for little gaps like this, currently the Euro NZD is trading within that gap. The close of the gap was at 16218. So let's go ahead, put that on here, 16218, and the open of the gap over the weekend was at 1606. So tell me, this right here, this wasn't even a weekend. This on my MetaTrader 4 chart is a gap. On TD Thinkorswim, it's just a big bearish candle. You're going to see this on TradingView. You're going to see this on whatever charting platform that you use. But look at where price is right now. This on MetaTrader would essentially be filling a gap that is existing, at least from what I can see. But for traders who are only using Thinkorswim, you know, they have no gap. They have nothing to compare it. And this is a fairly large range. This is, just to be exact, about 160 pips. So keep that in mind. Really make sure and be certain that a part of your plan is to be prepared. A part of your plan is to have your risk management, to know in advance what it is that you're going to do when the market gives you certain confirmations. And if you ever feel as if trading is challenging, it certainly can be. But that's because we as human beings have the tendency to overcomplicate things. And I am eternally grateful for each and every single one of you who did stay tuned in for the entire duration of this video. Hopefully you got some value from it. And I really do believe that having an opportunity to learn while you're earning is fundamental to achieving success. Why is that? Just imagine how committed you are going to feel seeing progress on a weekly basis. Go back and remember that time where your take profit target was achieved. How did that feel in contrast to when you got stopped out? Something that I actually just did recently with, after speaking with one of the admins in the Forexia community, was putting my charts on negative mode on the phone, so that psychologically, when I go and I look at my positions, there's not this mayday, you're losing money, so to speak, feeling if I'm literally just opening a trade and something as simple as the spread is causing the position to be in a negative. Now, our psychology has such a huge influence on trading, and it doesn't have to be a struggle to find yourself with a winning edge. One of the best things that you could do for yourself and your trading is formulate a plan of action if you don't have one yet. Conservative consensus, if we're going to talk about risk management, well, initial starting capital is one of the biggest challenges any trader will be faced with. And I would say, based on the amount of times that I get asked this question, sure, you could start with a $200 investment, but I wouldn't be trading any more than a single micro lot. Of course, you have to use the risk that you're comfortable with. Know that you can be confident and know that you can be a profitable trader if you're willing to put the time in. This is a skill set, one that can pay you for life. And, I'm here to help you gain an immersive educational experience for a fraction of the cost. That's why I do streams like this. My goal when you're working with me is to help you consistently collect just 200 pips each and every single month. Do you believe that you can do that? That's trading the majors, the GBPUSD, the EURUSD, the miners, cross-currency pairs, whatever it is. You can trade any market. You can be successful only trading one currency pair. You can trade anything and everything under the sun. But would you rather find the highest probable scenarios, find yourself in those winning situations, and just like you said, be optimistic for the week ahead. Be grateful that you're breathing. Be grateful for this opportunity and really just, capitalize on the experience. And knowing that you can have a plan of action, if I were to give you some insight on what it is that you could put into that, what's important in a plan, what makes a plan. First and foremost, knowing your edge, knowing your confirmations, knowing what information does the market need to show me so that I can feel comfortable and confident going into this. You need to know your risk management. You need to know, okay, am I going to be happy with only a 1-to-1 risk reward, a 2-to-1, a 5-to-1, a 10-to-1? All of these are possible, and all of these I've personally been able to experience and see students who have been working with me achieve. But at the end of the day, comparison is a killer, especially in this business. Your results are indicative of what it is you put into this, just like I said. So with that, we're not going to go too much further with this. If you do have questions, feel free to ask. I have much appreciation for your time, and I equally respect mine. So at this point in time, I'm going to do something that I've never done before. I've been working very, very diligently on some new upcoming education. We're currently on the 9th lesson, and this is really everything that I've been able to learn in my trader development journey since getting started with trading August 4th, 2014. It's coming up on 3 years for me, and of course I have so much to learn. Forever a student. I've had the opportunity and the ability to work with phenomenal mentors like Eddie Batteri, Christopher Terry, Steve Ward, Michael Gross, James Cordier, ICT. There's so many sources of information out there, and I'm just doing what I can to help people just like you overcome the challenge of finding a winning edge and really just elevating your mindset to the next level using skills and techniques I've been able to develop through furthering myself with personal development and certifications. The next thing I'm going to share with you before I close this off is something special that I'm going to do. From now until market open, so that's give or take 23 hours and 17 minutes if we're going to speak specifically. Anybody and everybody who opts in to the new trading signal service that I've launched for just $33 a month, you're going to gain access to the initial stages of these educational lessons. You're going to get a step-by-step format, trade entries, stop losses, take profit targets, detailed confirmations, chart analysis for why we're trading. And what's great is that these are mostly limit orders, so we can control the quality on our trades. There are market executions, and if you're going to talk about how many trades are we taking, anticipate on average about 15 high quality scenarios each and every single month. Of course, there's an abundance of opportunity, but would you rather take only the highest quality trades, or would you rather be trading 20, 30, 40, 50 times in a day, collecting a couple pips here and there? Think about this. Having a clear trading plan of action and goals to strive for are important, right? When we focus on the pips, not just the change in our account balance, building this skill set is going to become so easy, and we can know it's going to benefit us for life. Realize that the profit comes naturally, and this is an ongoing learning experience. I do believe that you can become a full-time trader, but you should always consider, will you be taking withdrawals from monthly expenses? This is going to add pressure onto needing to trade and use high leverage. With the signal service, why it's priced at such a fair amount is because I don't want anybody to have to feel like they need to over leverage or over trade, or really just do things that could ultimately blow up your account just to pay a monthly subscription fee. That's crazy to me. It's frequent in this industry to see short-lived success. And if we're going to talk about increasing our odds of success, really just do what you can to get more initial capital to invest into your trading account. I'm not going to tell you what you should or shouldn't do. I'm going to allow you the opportunity to use a demo account. I'm going to help you so that you don't need to feel like you're missing out on opportunity. You're being frustrated because you step away from the screen, and by the time that you check back, price did exactly what you thought it would, but you weren't prepared for it. Your mind is such a huge part of this process, and one of the challenges that I feel I've been able to overcome is that fear of missing out. Feeling as if you always need to be in the market really just it's not a winning situation. And with the right guidance, anyone can overcome limiting beliefs and start trading for the right reasons. With focus, discipline, and a proper trading plan, I believe that anybody can be successful with trading, and I'm confident that for all of you who are investing into your education and who are committed to learning the process, you'll be there too. I'd like to thank you, and make sure that you subscribe to the channel here on YouTube if you're not already. We're going to be doing these analysis sessions more frequently, getting more concise, just fine-tuning the methods, and really just doing exactly what we need to help elevate our trading business to the next level. I'm Zachary. You can find me socially as IZXTG, and I thank you. I appreciate you, and I'm looking forward to trading with you.